To our global CTKS family, we're grateful that you're here. All of us together make this one of the best communities on YouTube. Here, we use the world's leading indicator of price, the CTKS method, to give us X-ray vision across stocks, cryptos, forex, commodities, and yields. So we can see what the top 1% in financial markets see before the move happens. That's a license to print money and a way to stay safe. Whilst others are panicked, we are calm. When others guess, we stack probabilities. We don't fall for hype or stories, we profit from reality. We know making just 3.5% per week is a 498% profit per year. We are the elite 1% in financial markets. Price moves in waves, so no matter if price is going up or down, please be kind to yourself, be kind to others, be dedicated and committed, and never blame. Instead, learn and grow into the best version of yourself. Let's see what the markets are doing today. Looking into the stock market, fear and greed reading, it's currently 13 at the moment. Now, if we look at the timeline, that's pretty low. But where was 13 previously? We'd need to go all the way back into April and just before that. So this is a really fearful time inside the stock market. In yesterday's video, I said that I was just doing active trading because the VIX was basing up. Now we've seen the VIX continue on its road up, and this is what brought the stock market down and the crypto market down as well. Inside the crypto market, the crypto fear and greed index is 14. We'd have to go all the way back to the end of Feb, just early March, to get that reading. Now, these readings typically indicate bottoming patterns, but what does the structure say? Because structure is everything. In yesterday's video, Bitcoin was around here. Now, what did we see after that video? Price rallied up and then price sold down. So the overall movement was in fact down. One thing that I like to tell myself, and I'll share it with you, 24 hours is a really long time in financial markets. So you can see things like this. You can see that price comes up, and then when it comes down, you see the waves up and waves down. What we're seeking to do each day inside the daily video is to try to project out 24 hours in advance through all of these market sessions. We're talking about the Australian market session, the European market session, of course the Asian session, the Dubai session, the European session, the US session, and then getting back. Now that's a lot of sessions. And that's precisely why price can move around so wildly in a 24-hour period. And remember, crypto is 24/7. So what we want to do is to understand the structure. So let's turn on the monthly indicator. Now what we can see around this 93,100, we lost that structure. We also lost the structure at 94,100. If it goes below, it's targeting the next level below. So that raises a question, what is the next level below? Now the elite service members get the projections on the up, down, and consolidation price paths for all the charts inside the cheat sheet. So they already have these lower levels. So let's have a look at that. Where is the lower level? Oh boy, it is really down, and it's light. 87,250. Just remember 87,250. Now, if we get a structural overshoot, because this is likely to cause a lot of panic inside the market, Bitcoin has very little. It's got this little tiny weeny thing down there at 87,250. Now, what if it loses that and structurally overshoots? We're thinking 82,700. Now, this is why it's very, well, it's vitally important you know where your structure is. Typically, what people do, they will just literally draw structure to the current price. This is actually a pretty nutty way of doing things, but this is how people do TA, but not us. Now, what is involved in drawing these lines, and what do these lines actually mean? CTKS structure, which are these lines, they tell you the underlying liquidity flows in advance. You know where price can go. The support and resistance levels are already known because we read to the right. We know where price can explode because there's gaps inside structure. People talk about fair value gaps. We know where they are before they print. As we've just seen, we've seen very weak structural support on Bitcoin and a very nasty negative gap down. The one thing to understand, these gaps typically get filled. When you have stronger, thicker, and more clustered areas of CTKS levels, also called SLs or Stanfield levels, they create gravitational wells where price is attracted back to. Now, how exactly is one of these little dotted lines created? It actually requires two levels of standard certification. Level 1 is the absolute basics. And then inside level 2, this is where all the magic happens. You can see it's quite a process. It's not just literally drawing some random line that gets moved around all the time. This is hardcore science. And then that fits into a system. We do the CTKS cheat sheet on a daily basis. And I'll give you just an understanding of that very, very quickly just after this section, because it's very important you know what you're looking at. So we use level 1 and level 2 standard certification to draw the dotted lines, which are called SL, Stanfield levels, or CTKS levels. This creates the daily structural model. Inside the service, I share through all of these charts inside the cheat sheet the monthly structural models, which are positive, neutral, and negative price projections based on structure. With this, we understand where the price is actually going and where the structure interacts with price. This is from level 2 standard certification. And then the last thing we look at are long view forecast models. Now, the key thing is that you must focus on the daily. You've been taught to focus on long view models. That will keep you very, very poor and very stressed out. Basically, everything you've been told about financial markets will just cause you to take loss after loss after loss. For example, when should you buy? Well, you should buy low. Well, not just low, at the exact bottom. And when should you sell? Well, you should sell high at the exact top. Buying at the bottom and selling at the top is pure fantasy. Instead, we buy and sell with structure. And we understand which way the momentum is going inside the cheat sheet. Now, what caused the sell-off inside Bitcoin? There's a free resource at ctksmethod.org which will help you to fill out the cheat sheet. If you go to the home page and just scroll down, you'll see an area which says your cheat sheet to mastering price action. Just get the download free button, just click that button and you will download the cheat sheet. The cheat sheet is 7 rows, and these particular charts give us the actual understanding of the markets, not just the crypto market, not just the stock market, but all markets, including commodities, bonds and yields, Forex, and just about everything else, risk on, risk off sentiment. It is incredible. You do institutional grade analysis, and you'll need to, or else you'll get conned by people who don't understand how markets work. For example, every time the market comes down, you'll get something like sailors buying, all the funds are buying, and what's happening? Bitcoin is going down. But why is that the case? Because row 1 and row 2 are throwing risk off signals. If the VIX is coming up, you bet your bottom dollar that everything is coming down. So let's check that out. Let's check out row 1. This is a template from the Profiting Masterclass. Row 1 is the VIX, the DXY, dollar yen, the 10-year yields, the 2-year, and oil. With these charts, we're looking on a daily basis, so we can see that the VIX spiked up really substantially in the past 24 hours. Now, when the VIX spikes up, we can expect negative price momentum on not only the stock market, but of course, Bitcoin. If Bitcoin goes down, your beloved alts are bleeding. because no alt can escape Bitcoin's gravity. And well done to everybody who pinned those rules in yesterday's comments. You are absolutely sensational. So we can see the VIX has been going up. Now, it's not only going up, but it's being supported. This is exactly where we don't want to see the markets. Now, a lot of people will say, I don't want this to happen. I want whatever I've got to go up in price, not go down in price. And we hear you. Absolutely. That's what we all want. That is if we're going long. If we're going short, we want the opposite. But the issue is, we want the markets to go in the direction that we want them to, not in the direction that they're actually going. Now, what we must do always is to embrace reality. Now, this is really, really difficult to do because the markets, when they don't go the way that they should be going, which is the way we want them to go, we get angry. And we get angry and we revenge trade. So what does that mean? It means that if we see, for example, if you're inside Bitcoin or the crypto market, you might be trading in ADA or XRP or Doge, and you see those particular cryptos day after day coming down. What will you do? You will say, this thing needs to go in my direction. It needs to come up. And you might just double and triple your positions all the way onto the downside. And you don't want to actually do that, because what you're seeing here is the VIX has been basing and it's in the process of taking off. Now, does it mean it will continue to go upwards? Not necessarily. But that is the probability just at the current time. Now, how does this thing work? So if we get a big upsurge, we typically get a bit of a retracement and then an upsurge the next day. For example, we had a big upsurge, it went a little bit further, and then it came down, which caused a slight rally. But you can't really see that here at the moment inside Bitcoin. Now, Bitcoin is overreacting towards a lot of different things. Bitcoin is the best risk off or risk on sentiment indicator that you will ever see. Now, if we get a flight into the DXY and if the yields start to come down, what we would anticipate if the yields come down, gold and silver and commodities should do well under those conditions. It's the push down of the yields which sparks rallies inside gold and silver. And of course, we cover those off inside the cheat sheet as well. We don't just do crypto. Crypto is the most globally sensitive risk on or risk off asset class. We need to cover Forex, we need to cover commodities, we need to cover bonds, we need to cover literally everything. It's that risk sensitive. You are the top 1% because you're doing what the top 1% actually does. The top 1% looks across all markets. They understand when they're looking at something, all the charts are intercorrelated and interconnected, and this is wildly important. Row 2 are junk bonds, the euro dollar, the Aussie dollar, and look at what happened to the Aussie dollar. I was pointing out yesterday that you must keep your eye on the Aussie. The Aussie is very sensitive. Aussies are very sensitive. They're awesome people. And please let me know where you're watching from. We can see gold and silver, because the yields have been going up, they've been retracing. But if the yields start to go down, we could see a bit of a kick up in gold and silver. It's just something to keep your eye on. Now, the Aussie dollar coming down like this supports the VIX going up, but we are entering an area of support through here. Many retail traders and investors will see the support, well, especially traders, will see the support area through here based on recent indicative price. This is on a daily basis. So they will expect that the Aussie dollar will gain some traction here. Now, when we look at junk bonds, we also see that we're potentially forming a bit of a BA. Now, a BA is a buy arc. I would suggest that it's really early days. Now, one of the things that I would just like to explain, you don't have to catch every wave of price action. That is not required. We have a rule, risk off at structural uncertainty. That's what I've been doing. I've just been trading actively. Passive is that you hold it overnight. Active is that you don't. The unfortunate thing about the markets, because they're always moving in a wave-based function, they're very, very confusing for people, because people say, this is going down, whatever it is. Say it's the Aussie dollar. The Aussie dollar is going down, so therefore it must continue. Yeah, it came down here, it must continue down. And then all of a sudden it whips up and people say, okay, it's coming up. And then what does it do? Pesky thing, it goes down. And this continuity bias is what typically desynchronizes people. But if you learn to start thinking in wave-based format, it is completely different. You know the price always moves in a wave, and you don't have to catch every wave, because unfortunately if you do, you'll probably drown your account. And we don't want to do that. Going into row 3, which are the major market indexes such as the SPX, the S&P 500, the IXIC, which is the NASDAQ, the Dow Jones Industrial, the DJI, and the RTY, the Russell 2000. We can see that the markets have been moving in a wave, and that is currently under negative price momentum. We've seen the Dow that really rallied up very, very strongly has triangled all of those gains. These triangles occur with regular, unfortunate monotony. They happen a lot. And we're also seeing poor old Russell. Russell is bleeding. Please let me know in the comments, do you think this is over, all the damage has been done, or do you think there's any more space for the major market indexes to fall? And then of course, the second question is, if the major market indexes continue to fall down, and you know they're going to just be moving in a wave if they do. They'll come down and they'll go up, and they'll come down and they'll go up. But if you can time those, if you know the structure in advance, which you already do, every single chart here has a structural indicator from inside the service that you can overlay on these charts. So you know the structure already if you're an elite service member. So you will understand where the structure plays into all of these charts. If you're getting gaps inside structure, that means a lot of pain and a lot of panic. But don't forget, panic to the downside often means panic to the upside when things repair. Unfortunately, a lot of people think there's no association with the crypto market, i.e. Bitcoin and the alts and the stock market. You can see over the past 24 hours, there's an unassailable connection between the two. NASDAQ futures, if the NASDAQ futures is coming down, the S&P 500 futures, the Dow futures, the Russell 2000 futures are coming down. What's happening to Bitcoin? It is actually moving with those futures. So it means that we must understand what's happening with the main markets. Unfortunately, a lot of people don't see the connection until it's too late. So for example, on social media, you'll get, I'm out, I lost all my money, I'm out, I'm just selling everything, I'm closing my account, and they're back tomorrow. It makes a really good story, but it will drive you utterly insane. That's just pure engagement farming. In order to become consistently profitable, one of the best things that you can do is to actually disconnect from social media and connect into structure. You can learn how to draw structure yourself from ctksmethod.org if you would like. Now, when you also look at how to become consistently profitable, there are a lot of rules that you need to understand. One is, if you're inside the crypto market, no alt can escape Bitcoin's gravity. The reason that Bitcoin Cash and BNB and Pepe and ETH and all of Doge, XRP, ADA, the reason that all of these move in alignment with Bitcoin is because Bitcoin is literally the thing that causes the alts to move. So therefore, if Bitcoin is going up, what do we expect the alts to do? Is there any proof of this? Yeah, absolutely. We can see it all the time. If Bitcoin pings up, the alts will ping up. If Bitcoin pings like that, there you go, again. But what happens if Bitcoin comes down? And what happens if that is a sustained downtrend? The alts will sell off. It's exactly like the major market indexes, the S&P 500, the Nasdaq, the Dow, and the Russell. If they are all joining the party on the downward slide, and that is what's happening inside the markets. When you look at Bitcoin, hopefully when you get that expertise up to a institutional grade level, you will see that the futures of the S&P 500, the Nasdaq, the Dow, and the Russell are all coming down as well. That's called reading through charts. I teach how to do that inside the Profiting Masterclass. Now, one thing, when you look at the crypto market, you must do two things. You must look at total crypto market cap from a structural perspective, and also Bitcoin from a structural perspective, and then refer back to your money chart, the chart that you put money into. So where is the structure across the entirety of total crypto market cap? In other words, where is the structure of the crypto market itself? We can see that currently we're at $3.08 trillion. Now, what's happened just recently is we had a bit of a negative gap. We had a structural overshoot here and a structural overshoot at that 3.08. We came into the 3.06 and bounced. That's what's causing the bounce on Bitcoin. Bitcoin and total get structure from each other. That's mind-blowing. But it's a fact, and we see it all the time. That's why you must look at total crypto market cap as well as Bitcoin, because those two signals will tell you just about everything that you need to know from the crypto market. And of course, you need to see and you need to be aware of the structure of what you're putting money into as well. And please don't spread yourself too thin. Now, one thing to just pay attention to, if we didn't have this structure here across the entirety of the crypto market, Bitcoin and the alts would have sunk down. We're getting an interaction, a structural interaction just here. But remember, Bitcoin is very, very weak structurally. This doesn't mean that Bitcoin will continue to come down, because if we find structural support across the entire crypto market, we could structurally target higher levels. And this is always part of your role as a trader. You must think in terms of three dimensions. Remember how I was just saying the continuity bias is like, oh, this thing has gone red. It will continue to go red. What just happened? It went green. It will continue to go green. Oh no, it went red. It will continue to go red. What's actually occurring here are structural interactions. When you know where the structure is and you can see the structure and you read it to the right, and that's how we're looking at the structure across the entire crypto market at the moment. You get X-ray vision. We do not believe in bull markets. We don't believe in bear markets. We believe in eagle markets, where the waves of price are constantly moving. And this is the truth. This is the reality of financial markets. If you can read across markets, you can make a huge amount of money by just doing small percentages. Nobody tells you that, but that's the way the absolute elite become elite. The other thing to understand, DCA and BORSOG are two completely different things. When you BORSOG, you're buying on red, and then you're detecting strength, and then you're getting out. Dollar cost averaging is you're just lowering your average buy price. The two are very different. And please let me know in the comments, what's the rule number for BORSOG? Okay, so when we're looking at XRP and we're looking through the lens of the elite service members, what we see up here around that 226 mark, there was a substantial amount of overhead structural resistance, and just a little bit higher at the 228. Now, if we get a structural failure, we immediately target the structural level below, which was 223, as we lost that 228. But that was weak. The probability of getting a structural overshoot was very high. And we've seen that we've just come down literally to that 212 level. Knowing where the structural targets are inside your charts is really, really important. And we know at the current time that we've got structure down here across the entire market, except for Bitcoin. Having X-ray vision is almost a requirement for your charts, and that X-ray vision must be based on something really, really solid. Not just, okay, the current price is here, I'll draw 100 lines to that particular price. That won't do anything because that price is always moving. You may have drawn lines there and drawn lines there. You can't do that. You need to look at the underpinning architecture. For example, when we look at Solana and we throw on the monthly elite service member view, what we can see is that 142 Solana had a substantial amount of structure, and then unfortunately we lost that. Down at the 133 and the 129.60, we can see that they are really key levels. So as soon as we lost the 142, the structure was pointing to the 133 and indeed a structural overshoot to the 129.60. Having this degree of confidence as to where the structure is inside the market is just so special. The option would be to look at the market like this and say, I don't really know where the structure is. I know where recent indicative price has been going up and down, and I assume things are going to happen around there, but it's not necessarily a pre-drawn conclusion, because as you see, structure does cluster. Thicker lines are stronger signs. I would suggest that knowing structure is absolutely mandatory if you want to put money into a chart. And if you've made it up to this point in the video, please let me know by just dropping a comment about CTKS structure. You are elite.
I chase every green, I flee every red. Candles explode, then drop like lead. I bought the peak, I sold the floor. I swear I've done this all before. Consistently losing is my way. The rules are there, but I stray. My hope is high, my nerve is thin. I lose before I begin. Too scared to enter, too scared to stay. Fear won't let profits come my way. Each candle a hope of what could be. A fantasy of anxiety. From loss to structure, CTKS structure guides me where to go. Smart money's architecture in every ebb and flow. Before price moves, I already know. CTKS structure guides me where to go. I act on confluence, not fear or FOMO. I follow structure, I follow my plan. In motionless action, that's where I now stand. I hit rock bottom, my thinking was the problem. Every time I felt certain the move had already passed. Trapped in the rear view, stuck in the past. Fear wasn't in every trade I made. Confidence lost, gains betrayed. My job's to buy and sell well. In CTKS structure I dwell. I wait, I target, I plan. It is CTKS structure I again. To structure, CTKS structure guides me where to go. Smart money's architecture in every ebb and flow. Before price moves, I already know. CTKS structure guides me where to go. I act on confluence, not fear or FOMO. I follow structure, I follow my plan. A motionless action, that's where I now stand. My account mirrors my mind. I leave my emotions behind. It's time to master myself, time to set every loss Now I trade with reality, not hope. With structure, I know how to cope. Strength is born, emotion goes. From CTKS structure, everything flows. From laws to structure, I follow my plan. CTKS structure guides me where to go. Before price moves, I already know. Consistent losses, no more, no more, no more.
If you found a new knowledge gem or learnt something new, please share it in the comments. We are a community of abundance, not scarcity. If you're new, we would love for you to become part of our global family. All you need to do is smash like, subscribe, press the notification bell, and comment on what time it is now. Doing this shows that you are committed to forging a better life for yourself and the ones that you love. With financial literacy, you can become recession-proof. Trading and investing are lifelong professions. Tourists visit during bull markets only to get wiped out, but professionals stay no matter the market conditions because they know that making just 3% per week is a 365% return per year. We are the elite 1% in financial markets. You will create security and financial freedom in direct proportion to your willingness to learn and grow, and never blame. If you commit, your world will improve immediately. If you're going through a life pullback, our love and healing thoughts are with you. The sun will come out again. There is always hope. Be kind to yourself, be kind to others. Show gratitude and happiness, and you'll already feel richer today, and today is all we ever really have. Kate and I very much look forward to joining you again in the next video.